he moved on to the commercial side of F&B. So he's not so much intrigued in the homeless anymore, so I lost all of that information. And I kept on phoning John even after COVID, and I said, John, I need information, I need to know what's happening in the market. No, so John has got a world of knowledge in terms of the economy. He knows a lot of the world's economies. And John is also a very keen cyclist. So if he's not doing economy, he's cycling around the country. So he knows all the small towns, he knows all the places where there's where they can sell property, you can't sell property. So please, John, thank you very much for joining us, and the other people was having.
Thanks, Elvis. Yeah, it's always lucky to come to Bloemfontein. I know it's a bit of a quiet place or whatever, but that's sometimes good. You know, in Gauteng, people flowing in like mad. In Cape Town, there's people flowing in like mad. You know, Bloemfontein people, sometimes they think they've been sort of neglected or whatever, but maybe that's not a bad idea. Half the world doesn't want to live here. It's a lot more peaceful in this part of the world. Every place has got its different issues. I just wanted to mention one idea that I've got about the Free State. And the Free State is the Free State is a former republic. Okay? Now, I don't know why the cheaters are still playing just curry customs and females tournaments like that. You know, in the UK, the provinces like Scotland and Wales or whatever, which are ex-countries in their own right at some point, they play international rugby. So why aren't we seeing the cheaters playing test rugby and playing the World Cup? That should be what's happening here. They get left out of all these other competitions. Why don't they just make a bid for, as a former republic, to play test rugby? Like Scotland. I mean, what the hell? Anyway, just a thought. If you know Mr. France Stein, maybe just mention that to him. What the hell, if a former republic like Scotland can play test rugby, why not the Free State? Okay. Anyway, that's enough. I'm not here. If I talk rugby, then I start talking about the Blue Bulls. That's my passion. So.
No, I think so.
I won't talk too much rugby right now. Talk economy and poverty. Talk bigger picture. I don't think I can tell you what goes on in Bloemfontein. You must know better than me what goes on in Bloemfontein. But there's a bigger picture, there's an economic picture and a bigger property picture, and maybe that'll be of interest to you, so I'll sort of stick to that more. Now, the first, the simple stuff. Inflation is very much under control. Well, let's put it this way. I know some people have their doubts about CPI inflation, whether it measures accurately. It's probably not 100% exact science. But the inflation rate for the country, the official measure which the SARB goes by, is the CPI inflation rate. That's down hovering just at levels near to 3% these days. So very much under control. Oil prices haven't shot through the roof. Food prices aren't too extreme at the moment, or inflation rates. And so interest rates have been coming down, as we know. It provides a little bit of a stimulus. They've come down to 10.5 prime from 11.75 prime. We do think that the SARB has scope, given 3% on inflation rates these days, for mild further reduction. We think prime rate could make a turn in high single-digit territory, but gradually, probably only sometime in next year. But we do think that, given also that the SARB wants to try and target 3% inflation now and not 3 to 6%, that seems to be where the noise is shifting toward lower inflation, they're probably not going to do what they did in 2020 and cut to something like 7% prime. So it's a moderate interest rate cutting cycle. We think that 7% prime was abnormal. Abnormal because of an abnormal crisis called COVID. They had to cushion the blow because of a lot of income loss and so on that was associated with lockdown. So interest rate cutting was one of them. So this is more or less this is our basic economic forecast. It's nothing wonderful. Last year, economic growth rise, we had 0.5% economic growth. Now we're talking about 1% this year, 1.4, 1.9. So we end up in the next few years to something nearer to 2%. Okay. That's not great sort of stuff. Great stuff is more like 5 or 6%, which we had prior to 2008 loss. So it's a mediocre situation, driven by mild interest rate cutting and ESCOM that keeps the lights on a bit better these days than what they used to 2-3 years ago. and prime rate comes down and sort of settles, and we've got a forecast of ending 2027 at 9.75. So very high single-digit territory, and that's probably somewhere there, not far from 10%, is probably where we settle with interest rates. So it's not that there's no wild excitement there, just some moderate stimulus for the market at best. Okay, but where the excitement comes in is in the global uncertainty that we have. Bloemfontein is not, it doesn't have big vehicle manufacturers and people like that who are hanging around, but down there in the Eastern Cape or whatever, there's been quite some concern with what's happening in the US and the tariff wars that are going on in the world, the protectionist sort of spirit that's come to the US. And a lot of people will just say it's because of this guy, and he certainly does, his style does create a lot of uncertainty. He sort of threatens a big tariff on China today, and then China comes with a deal or whatever, and he cuts a deal, and tomorrow the tariffs are gone. He's pushing for the return of a lot of manufacturing to the United States, a lot of manufacturing investment there. The United States has become much more of a services-dominated economy and less manufacturing. A lot of manufacturing shifted to East Asia, China, and the likes. And he wants to sort of turn that around, so he says. But it's going to be difficult for him to do that when one day you've got the tariffs there, and the manufacturing investor might say, oh, I could take advantage of those protectionist tariffs by investing in the US, but I'm not really going to, because tomorrow they could be gone when he cuts a deal. So he's a bit too volatile. He's created a lot of uncertainty which we have to live through, and that creates uncertainty for South Africa as well. You know, he slapped a few extra tariffs on us, and the automotive sort of and chunk of agriculture exports are threatened by that. We have to look for new markets. But it's not really just about Trump. It's about what's going on in the US. And I think it's created fertile ground for a more protectionist attitude. There's a chunk of the voters in the US that want more protection against imports and against immigrants. Okay? And probably this graph explains that, one of the graphs that explains it best. This is the Gini coefficient, which is on a scale of 0 to 1, this measures income inequality. And inequality in the United States has been on the increase. A bigger and bigger portion of income is in fewer and fewer hands. You know, the likes of Elon and so on, those super rich in America, you're sort of eating up more and more of the income. And there's a portion of the population at the lower end who are not going forwards. They are sort of, relatively speaking, going backwards. When you get income inequality, you often get rising anger and rising demands for protectionism for their jobs. You know, a lot of them in manufacturing, which has struggled in the US, and they perceive immigrants to be coming in and taking their jobs. So that's typically what happens when you get this rising inequality. That's been happening for a few decades in the United States. And so that creates a sort of fertile ground for greater levels of protectionism. So, what I'm trying to say, therefore, Trump will come and go. He's very old now, in any case, but you know, one day he'll be gone. But the US is probably not going back to something prior to Trump, that very open economy, that globalized economy and so on. It's probably going back to something, we're going to settle on something significantly more protectionist than then. And with higher import tariffs on average, even regardless if Trump is still around. It's not about Trump, it's about the environment that the US finds itself in, and this rising inequality and this rising frustration and anger and demand for greater protectionism. So we as South Africa have to live with that. Greater levels of protectionism normally come with slower economic growth for the world. When it goes through this period, globalization is the one with strong economic growth. So we're probably going into a period where lengthy period where the world struggles economically more than what it did in prior decades. Okay, and then so that's one issue. And what does that mean for? Why am I telling you that? Well, that's an economic pressure for us. We are an open economy. We like to export. So it feeds through to your whole economy with a lag. Exports not doing so well in perhaps. That's a source of pressure on economic growth. And then locally, we've also got our own growth pressures. I'll get later. I'll talk about the structural problems locally are well documented. A lot of areas of government which are a drag on economic growth. The service delivery and infrastructure delivery is not what it should be. But we'll get to that later. But another key issue at the moment is land reform issues, and that's a big issue for us. Land reform, the big issue in land reform is not about farming. Okay? I'm not saying farming is not important, but agriculture is a relatively small part of this economy, and the biggest chunk of the population is now urbanized. So land reform is about houses. That's what it's about. That's a big deal in land reform. And that, you know, so it's our world, or closer to our world. This is South Africa's urbanization rate, just to give you an idea. 65% of the population now urbanized. It was 56% back in 1996. Back in the 70s and 60s, it was probably the minority, but now it's the majority. So elections are not going to be won on redistributing farms. Elections are going to be won in towns and cities in future, more and more so. That's where the biggest chunk of the voters are, and that process is carrying on at a steady rate. Now, looking at economic growth, we've seen more and more of the economic activity is concentrated around the big sort of metro-dominated provinces. The Western, this is, I've just put GDP on a graph, real GDP with the base year 2000 to see how they've grown. And over the longer run, the top growth provinces, Western Cape, slightly behind Gauteng and KZN. Those are the big economic regions. The smaller economic regions, less growth-wise. Okay. So people are concentrated more and more around the big regions, and so is economic activity. Those are the two big. Now, this is not necessarily a bad thing for the Free State. The Free State is the slowest growth provinces from a population point of view. From 96 to 2024, the estimate according to S&P Global is a 16% growth rate cumulatively in population for the Free State. So the pressures are less. Western Cape, 84.7%, Gauteng has almost doubled over that time in population. These are the real land reform pressures. These, you know, that's where they are in the bigger provinces, on their sort of urban periphery, land for this inward migration of people and this massive population growth. So I don't know what's going to happen with with how the new Land Reform Act is going to be implemented. It's difficult to say yet. We've got this little test case here in Ekurhuleni, where the Ekurhuleni Metro has expropriated, I know it's sort of farmland theoretically, but it was on the periphery of the metro. This land is being sort of, the development rights are being sort of sought after to develop this land, and it's now been expropriated by Ekurhuleni Metro with zero compensation. Well, that's what they want to do, but now there's obviously legal battles going on about this. And this is something of a test case, because the court's going to have to decide, is it in the public interest to expropriate without compensation or not? So this is, you know, ultimately we'll start seeing how the judiciary will interpret the act, and we need that to see how it's going to be implemented. Is Ekurhuleni going to be allowed to do it? Is it going to precipitate a free-for-all, you know, sort of councils just expropriating land where they see dollar signs? Who knows? We'll have to wait till, I think, February. I think it goes to mediation now, and then there's a potential case in February, as I understand. I don't know where this is going, but what I'm trying to point out here is that this is sort of not surprising that it's on the urban edge, where the land pressures are at their most severe, where this type of stuff is going to crop up. That's where I believe the land reform issues are at their sort of most extreme. The pressures are at their most extreme around the major cities, okay, where the population is growing and so on. And that's where these battles are being fought. Now, another issue of land reform is the sort of structure of the apartheid city, which has to change at some point. You've got these dormitory towns with very little economic activity, big transport costs from there to places with economic activity for the the employed, and the poor stay poor, not only because of the lack of job opportunities, but because of high transport costs in the process. So the challenge is, how do you take more of the economy away from the traditional places where the main economic activity is to the places which are dormitory towns? Not just taking affordable housing towards these. This is a big issue in Cape Town at the moment. We're around the City Bowl in the Atlantic seaboard. It's densifying radically. There's a lack of space. There's massively high property values and big pressure, political pressure to provide affordable housing solutions in that area. But how do you do that? How do you do that when there's not much space anymore? And a lack of focus on taking a lot of the economy the other way towards the Cape Flats and so on, where we need more economy. Transport costs are high, we're perpetuating the structure of the apartheid city. Another big land reform issue. That little left diagram there is the city of Curitiba in Brazil, developing country too. They solved a lot of problems by creating transport corridors, where they densify along the corridors and prevent it away from the corridors, and channel a lot of people's trips onto one corridor, and then you've got viable public transport because you've got this high density with, living with mass demand. Okay, we've got low density living, so public transport is not always viable. It relies on heavy subsidies which governments don't have in this part of the world. So this is another big land reform issue. Part of the problem is taking office space. Part of the solution has been in the sort of old CBDs and so on to according to my survey, my property broker surveys for the first half of 2025, 19% of office sales were for conversion purposes, to repurposing to residential. So that's part of the problem, part of the solution. But the other big land reform issue which is needed is to take, whether it's light industrial or whatever it is, much more of the economy to those outlying former township regions and create much more economy there with much more jobs. Okay, that's part of the land reform. So these are real land reform issues, not the simplistic view that land reform is about expropriating agricultural farms and redistributing it to people who want to farm. That is an issue, but the big land reform issues to me are in urban areas, and on the periphery of urban areas where land pressures are brewing. So I just thought that's one of the issues. And now we wait for a court case or two to see how it's going to be implemented. That's where we get into with this the new Land Expropriation Act. It's difficult to say what will happen. I'm just trying to point out where the issues and the pressures are in the meantime, the big ones. Less so in Bloemfontein and the likes, because the population growth pressures aren't as severe as what they are in Gauteng and in the city of Cape Town and the likes. So that's probably where the big land reform battles are going to be fought, and where you're going to see how it's all going to pan out. So I guess what I'm saying is you guys have probably got some time to see from other people's mistakes how it's going to work. In the meantime, interest rates cuts, take house price growth up. This is Stats SA's house price growth rate up to near 6%. It's not wonderful, but it's better than what it was a year or two ago. If you break it down nationally, though, the biggest contributor to national house price growth is the Western Cape. We've heard much about skilled semigration to that part of the world. They do have land scarcities there, which helps boost house price growth, even though the new developments in the Western Cape are sort of taking place at a faster rate than anywhere else. But elsewhere in the country, it's fairly sort of mediocre, I guess you could call it. Free State not too bad, 5.7% year on year, the most recent figures of Stats SA. Gauteng, where I come from, 3%, KZN 2.5%. But it's really our Western Cape story, they're growing at about 9% now. And that's the result of a sort of better service delivery, better local government management, better provincial management, fueling semigration of skilled labour, and probably a better economic growth performance as a result of that skilled labour inflow to that part of the world now. Okay, that's the sort of the national picture. What people are talking about a lot is this lack of ability of incomes to keep up with house prices. and you know, there's a lot of talk, not only here but globally, about young people who can't afford, you know, will they ever be able to afford their own homes, and, you know, millennials and less staying at home for longer and longer, irritating mom and dad and not moving out. This is what comes out in our survey, our simple estate agent surveys, where we survey a sample of estate agents where income, there's an option in this question, income levels are far behind, income levels are a bit behind, income levels have kept up, and you see that the income levels are far behind is 44% of respondents, that's what they're saying. But I think that it's probably not the house price growth that's been the problem, it's other factors related to housing affordability, but not the house prices themselves. Let me take a stab at it and show you a few affordability ratios to illustrate what I'm trying to get at. Okay, firstly, in the Western Cape, it could be house prices that have led to a deterioration in affordability. Cumulative from 2010 to 2024, you see the Western Cape, the biggest bar, 164% up over 14 years. And then a lot of the other provinces, that cumulative inflation is a lot less. Free State 85.6%, Gauteng 75%, that's 70-80% for quite a few of them. But you can't just take, just because house prices are growing up, that doesn't mean there's a deterioration in housing affordability. It's house price growth relative to income growth. And so these are the ingredients of national housing affordability. FNB house price index, okay, that's a bit lower than Stats SA's one at the second quarter, 3.2%. I take per capita disposable income, that's grown slightly faster in recent years, 4%. And then of course you've got to take interest rates into account as well. So these are the affordability ratios I calculate using those three variables. The bar graph, average house price, according to the FNB index, going back to 2001. I'll just take it because it's got a longer history than Stats SA's one, to per capita disposable income ratio. It's in an index form, so don't worry about the number. It's just the sort of the trend that you can see. And what one sees there, sorry, the line graph first, that's average house price to per capita disposable income. You can see that affordability ratio has improved quite dramatically since the peak of inaffordability, which was actually around about 2007. Her housing has got more affordable since the peak of that bubble. That was a crazy time when it was just madness the way, you know, that speculative bubble that we had prior to the 2008 GFC. You can see it's come down a lot, which means that affordability has actually improved, and in recent years it has carried on improving according to that measure. But of course, now you've got to bring interest rates into the account, so what I do with the bar graph is average priced house, repayment value on a new loan, new 100% bond at prime, just simplistic, to per capita disposable income. That ratio 2 is significantly better than where it was at the peak of inaffordability in 2007-8, just to give you an idea. It actually is not too different at 104. That index value of 104.7 is very similar to 2001, prior to the big property boom. What's different? Well, okay, back in the 90s and sort of around early 2000s, interest rates were still a bit higher in those days. They were coming down radically, and of course, per capita income was significantly lower then than what it is now. There's this inflationary impact on income too, so it's not just house prices. So the affordability levels aren't as extreme as what they were sort of almost 2 decades ago. One thing that has changed is there's a lot more to spend your money on, consumer goods wise, and consumer goods and services affordability has been sort of remained better relative to housing affordability. So now I bring the bar graph at the bottom there, average consumer price, consumer goods and services to per capita disposable income. Those have stayed low all along. They didn't have that big price bubble that property had. And then property stayed at a sort of relatively higher rate since. So what I'm trying to say is that consumer goods and services have become more competitive relative to housing, okay, over the decades. They've stayed low and competitive affordability-wise, and so when you've got a choice, Okay, the youngsters are consuming more and saving less for housing. Yes, they probably are. All these consumer goods and items that they so love are more competitively priced than housing these days relative to what it was in the 1990s. Okay, but this is where the big deal in housing affordability deterioration is. It's the operating costs. And we know that from commercial properties as well. You hear Growth Point and the likes, or you see them regularly in the media moaning about the costs of running retail malls and so on. It's the same for residential property. Taking a CPI from 2008, that red line going up there, that's the CPI for electricity to per capita disposable income index, and it's deteriorated massively. Okay? Electricity costs are far higher than what they were in 2008. And even the other one, the green line at the bottom, that's water and other municipal services, municipal rates and so on, that has deteriorated noticeably too. The overall, putting it all together, so CPI for municipal rates, utilities tariffs to per capita disposable income ratio, that's 70% higher than what it was in 2008. That's where the real affordability deterioration is. Not in house prices so much, but in the housing related operating costs. And that's the sort of catch. It's been mitigated to a certain extent by crowding out the private sector part of operating costs, home maintenance and repairs. Their pricing power has been squeezed by that public sector part, and so they've improved somewhat. Home maintenance and repairs to per capita disposable income ratio. It's been tough being in property management and property maintenance over the past decade or two as they get squeezed by councils. But overall, you know, in the commercial space or whatever, we've got data that takes total operating costs, put it all together, and those have been deteriorating. The affordability of operating costs has been deteriorating quite radically. I have no reason to believe that it's any different overall for the residential property side as well. Okay, so there has been the affordability deterioration more so than with house prices, with the exception probably of a big chunk of the Western Cape. Okay, and then there's the issue of debt affordability. Now, that red line there is the average interest rate on all household debt. Okay, it's significantly lower these days than what it was in the 1990s. So from that point of view, you'd say debt is more affordable. But there is more debt. That's the other side of it. The bar graph is the household debt to disposable income ratio. It's improved somewhat since the 2008 peak of, where it was at its highest ever, after the at the end of the housing bubble. But at 62.7%, it's still significantly higher than what we were in the 1990s. So debt affordability is up from the 1990s, not because of interest rates, but because of the levels of debt, the levels of indebtedness. That has created an affordability, kept affordability not so wonderful. And then the other source of pressure on finances for the household sector is tax rates. It's not only local government taxes, but income and wealth taxes as a percentage of household income. Back in 2004 was 9.4%, it's now 14.1%. So an extra almost 5 percentage points of household income goes to personal and wealth taxes. That has sort of pushed the affordability boundaries out as well. So that's just to give you some perspective of where I see the affordability deteriorations. It's more with these other things, not so much with housing values. It's the operating cost and the taxes, various taxes of national government and local councils and so on. That's where affordability has become a challenge for the residential property market. How bad has financial pressure been through this last interest rate cycle? It's been quite severe. There's no doubt about that. This is not FNB data, this is National Credit Regulator data. Mortgage accounts in arrears, according to NCR, it's not as bad as what it was at the end of the housing bubble, where it was almost 16% of total mortgages outstanding. But 13% is quite a significant number. That's where we've been in recent quarters. Starting to flatten out and should come down now because interest rates are being cut and so affordability of debt comes down. But nevertheless, that's still a very significant number. when interest rates peaked, actually quite a lot lower than in 2008. And that sort of reflects this weak economy and this growing this household financial pressure, not from interest rates so much, but from other factors as well, those tax squeezes and so on that I've been talking about here. So it's been quite a pressure period in recent years for households, and I guess for home loans lenders as well. Then, these are the arrears that collectively sit on the various banks' books. So we've gone through, but that should start improving now, or should have probably started improving now. The data runs a bit behind. We need a quarter or two to catch up, and we'll probably see noticeable decline. That's what normally happens when interest rates come down. Okay, so what I'm painting to you, I guess, is that we're in a period where the short-term prospects are for a slightly better housing market because interest rates are coming down slightly and create a bit of extra demand, take the financial pressure, alleviate some financial pressure. But I think most people I speak to, they expect a mediocre situation in South Africa generally. We've had mediocrity economy-wise for so long. We've had mediocrity and worse often in service delivery from various government side for so long, and people are affected by recency bias. They take the recent past and they extrapolate it into the future in a straight line, often mistakenly. Life actually works in cycles, and all good and bad things come to an end at some point normally. But we tend to think in straight lines. At the moment, for many of us, the straight line seems to be the sort of a longer-term downward path. If the economy is on this sort of stagnant path, then property markets normally are too. That's the reality. The longer run, it gets driven by the economy. Is there prospect for change, this cycle turning? I think yes. I made a mistake of moving in straight lines, thinking myself in the 80s when I was a youngster, and the economy was just stagnating in the 80s, boycotts and sanctions and unrest and protest and resistance, and everything was just getting worse. And it was very difficult to see any change, and the previous government hung on stubbornly, so it seemed. But then 2nd of February 1990 came, and suddenly policy change. It was a different policy at those times and a different issue in those times. But F.W. de Klerk suddenly took a radically different direction, which many of us sort of got caught by surprise. Now, why was that? Well, it's simple. For a long time, the policymakers drive the economy. But at some point, the economy starts to speak to the voters and the policymakers. It goes the other way. And if they want to save their political careers, then they have to often do something different. And that's what happened in 1990. Not many people remember this, but okay, so we were on a long-term, this is 5-year economic growth averages, my favorite graph. Cuts out all the noise, it's the long-term cycle dating back all the way to the 60s. The previous government's support peaked in 1977 at 65.3% of the vote. Okay? That was the best it ever got for them. It was a minority voting system, but it was a voting system nevertheless, and the voters that could vote in those days had some power. And as the economy stagnated, boycott, sanctions, isolation, oil price shocks, Cold War, you name it, global and local factors. So eventually from the late 70s onwards, the nationalist government support began to drop. And one fine day in October 1989, they reached 48.2%. They went below 50% of the white vote, those that could vote at the time. And basically in 1994, they would have to call another minority election at the latest, and they were probably going to lose that. That was the reality that de Klerk was facing. So what does he do? Turn right, go back to defending apartheid and swallow up the Conservative Party's vote, turn left in minority politics and swallow up the DP, not DA, the forerunner of the DA. That wasn't working, try and make apartheid palatable to the rest of the world, with petty apartheid laws being abolished. They've been trying that through the 80s, that wasn't working. Well, the third option was go and cut a deal with what was his enemy, the exiled liberation organizations and the imprisoned ones, and that's what he did, to salvage their political careers. And there was big radical policy change. The voters were speaking to them. The voters were speaking to them at the time with those results, and I believe that's what caused the big change. They had options, they could have taken other paths, but radical change was needed. Just like when FNB, which I work for, if we lose market share for a considerable amount of time, at some point the CEO is going to wake up and get out of the wrong side of bed, and all hell is going to break loose. People are going to, heads are going to roll, and strategy is going to change. That's what's going to happen. There's got to be a response. Okay, so we ended the boycotts and sanctions. Interest rates came down from their crazy high levels. Up went the super cycle. It was relatively happy days, and we had a property bubble of note. It was amazing stuff at the time. Big parties were had in this industry, and the next government's vote peaked at the peak of that cycle at 69.7% in 2004, and then we started to stagnate again because we weren't doing the right things. We were living off a credit-driven spree which couldn't last forever. We weren't fixing what needed to fix. We weren't investing in human capital or capital, fixed infrastructure and so on. And so eventually those things started to become a drag again, and there we went. What happened to the voters? They started to speak again. They are starting to speak in greater numbers, and by last year's election, the biggest party was down to 40%. Okay? Again, it requires a response. This time around, it's not about minority rule and all that sort of stuff, it's about something different. It's about delivery of infrastructure services, getting economic growth going. And there's only one lot that can do it, and that's the most well-developed private sector on the continent with big, well-developed financial and capital markets to fund it. And so you need to, there's the private sector, there's government, there's the dividing line between them, the red line. That red line needs to be pushed to the right, and the private sector needs to deliver goods and services. And government needs to withdraw to being an effective regulator. They are an effective regulator through their institutions in certain sectors. We regulate very well in the financial sector, we think too much sometimes, but nevertheless the SARB is a very effective regulator. And when you've got well-regulated competition, we've proven that we can be a country with world-class industries, like the financial sector, which, whether you like us or not, is rated as one of the better ones in the world. And retail looks pretty good, and various other industries look pretty world class. What's dragging us, obviously, is those ones where there's a protected state monopoly. Okay, that doesn't work so well. The incentives are all wrong. Human behavior is not driven upwards by a protected monopoly, it's driven downwards. Okay, and we're seeing that. That's the sort of drag part of the economy. So government needs to become a regulator, and private sector needs to take over more and more of the goods and services delivery, as it kind of has for many years. There was a crime problem from a few decades ago, and the security industry took over a large chunk of SAPS's function. Railways started to deteriorate, and road freight took over a chunk of that as well. Not ideal, but it's proven that you've got a well-developed enough private sector to solve most of the problems that need solving. They just need to be allowed to do it. And now more recently, you asked me, is this happening? Yes, I think it's happening. Not fast enough yet, but it's happening. IPPs in the electricity sector have taken over a chunk of that, and there's probably more coming. Now you're talking about rail concessions. I'm not sure whether the rail is revivable yet, but the thinking in national government at least is that private sector needs to take over a lot more of the stuff and invest, because that's the picture of government capex, capital formation as a percentage of GDP. It peaked in 1976. It tanked there afterwards in the late 70s, all the way into the 90s, and never really recovered. And we know it. The big infrastructure boom was in the 60s and early 70s. After that, started tanking with defense budgets taking over things in the economy, stagnating in the late 70s and 80s. And so we're living off very old infrastructure now, and it's just getting, it's not getting better. Government doesn't have the finances to change that around. And in state enterprises, the red line, that sort of reached its peak in early 80s and tanked thereafter and never really decently recovered. So their infrastructure too is running on empty. Okay? And it's the private sector, whether it's global companies or local companies with their access to capital, they're the ones that are going to be able to deliver on this. The state has very little room to maneuver because that's the red line at the top is its debt to GDP ratio, which just keeps rising. And as that rises, the bottom line that's rising is the interest payments as a percentage of its budget. So they're crowding out more and more of the non-interest expenditure. So there's very little place, and there's massive welfare grants and all these things that politically can't be abolished. So it's private funding, private sector ownership. That's going to have to do the good, do the thing. Now, are the voters speaking to government and saying that's what they want? Yes. It's the economy, stupid. That's what the Clinton administration always used to say to anybody that criticised them or questioned them. This is from Social Research Foundation, Frans Corneer's crowd, very insightful. It's not who they vote for, it's what the voters see as the most important issues. And the most important one, right there on the left, jobs and unemployment. Boom. Second, crime and insecurity. And this is not a bunch of Twitter people or a bunch of elite minority groups or something. This is a representative sample of the population. So most of these people are poor. Crime and insecurity, corruption, basic services like electricity and water. Fifth, illegal immigration. There's also a bit of paranoia about illegal immigrants like in the US. There's a lack of jobs here. There's a perception by many that these guys are taking their jobs. So that's also on the radar. But the other ones that come thereafter are fairly minor by comparison. It's about the economy, it's about service delivery. That's it. If that doesn't come right, the process of government change will carry on. We are in the process of government change now. We know it. The biggest party was at one stage near 70%, it's down near 40%. The opposition is fragmented, so we just don't know who the government in waiting is. But I'm not here to talk politics. I'm not going to venture a guess on who it's going to be. It's just that the economy is talking to the voters, and the economy is talking, and the voters are speaking to the big parties, and the voting patterns are changing. And this is what the voters say is top of mind. So whoever it is that's going to rule this country in the years to come and stay in power, that's the one they have to address. And that's why the noises are. We needed to fix ESCOM. And a lot of the power stations are old, a lot of the distribution network is old, and there's a long way to go. But the lights are being kept on for some mysterious reason better than what they were. It's not a mysterious reason, it's that. You don't fix things like electricity, you've got a problem at the ballot box fairly soon. This is the big stabilizer, therefore, for South Africa, I believe, which enables us to, I think, work through our tough times. Not that it's going to be quick. It's this diversified economy. You can't see the big one there in the bottom left, but that's finance, real estate, business, services sectors. What I'm trying to show here is that we're not a big agricultural country anymore. Or it's not a big part of our economy anymore. Agriculture value add is 2.7%. Mining next into it is 8-ish, somewhere around there, 8.4. We're about manufacturing, and we're about trade and wholesale, retail, tourism, transport, communications, finance and business services. It's not to disrespect agriculture and mining, but when you're dominated by agriculture and mining, it means you're not well diversified, and you probably can't solve a lot of a country's problems if need be. This private sector, this economy is so well diversified that we have the means and we have the financial and capital markets to back it up, which is so well developed that we can solve most of the problems that need solving if allowed to do so. And that's my cause for longer term optimism as we muddle our way through this messy period where we've made a lot of mistakes as a country, we know it, but that opening up to a private sector and then regulating it well, that's important. I'm not a free marketeer. I think free markets can be chaotic and shambolic, and if you allow them to be unregulated, some warlord might pop in and regulate it for you, and then it's less pretty than when government does it. So it's about well-regulated competition. Where we get that right as an economy, we've proved that we can have world-class industries. Where we have protected monopolies, that's where we go wrong. And that to me is, bigger competition in politics is probably also changing the way of thinking slowly. We're into the process of government change. It can be that the biggest party mounts a recovery and turns it around. I'm not saying that's not possible, but it will be then a ruling party in a different format with different policies and different ideologies. Whoever government's going to be in future, it'll be a different government. That's what I mean by government change. The voters are speaking in a different way to what they spoke 20 years ago. Just as the previous government's sort of radical change in policy thinking in the early 1990s was because the voters started speaking to them differently too, many years ago. And that's my story. Thank you very much.